Hello guys, it's Randall with BitRage. This is the weekly Forex Market Breakdown, and we're going to be looking at the DXY, the Eurodollar, and a few other pairs, see what we're looking for at the week ahead. So the DXY, obviously, this past week we saw that breakdown out of this ascending channel that we were talking about previously. It's very impulsive so far. We are seeing a little bit of retrace, but the daily still hasn't closed yet, so it remains to be seen where that'll actually close. But so far this is very impulsive. The move it is to the downside. We are almost out to the outer edge of this trend line, this channel. So it's be interesting to see how that reacts as well. A couple things to keep in mind. The reason why we saw this move up is because of these two areas here, where we saw an impulse down and immediately it gapped up. Immediately it gapped up in it engulfing bullish candle. You notice this is almost on top. So a lot of people are seeing that as support. This is the problem with support and resistance trading, is that if you don't understand price action, how it's breaking, and you don't understand how price moves, how the charts move, then you can take a lot of trades on support and resistance areas that are just going to not work out for you. Breaking this down to the hourly. So obviously we have impulse corrections all the way down. With this, it's interesting on the hourly. When you see a gap like this, often it will refill that gap area, and it did in this one, and then it moves off. So you can kind of ignore this. It doesn't really mean a whole lot. Obviously it could be this type of pattern, so we have to see how that develops. But I'm looking at the recent price action here. I want to see how that reacts. That's what's important to me. So let's look at the euro dollar. So I think it's a little clearer on the euro dollar maybe. If you look at this area where we're seeing this rejection on the daily, the double top to me is clearer on the hourly. It fulfills a pattern, which is the W pattern. So this is the possibility is this could move back down. It's rejecting that point, but the hourly hasn't. I mean, the daily hasn't closed on the euro dollar yet, and so we have to see how that ends. If we drop this to the hourly, you'll notice in our past videos I had mentioned this. I had this red line on. I had mentioned this as a double top potential area, and that's what appears to possibly be happening. But we have to give it a little more time to develop here. So we did get that overall arcing nature. We did get that long wick rejection. Had you taken this pennant style flag, that's fine. But when you saw that long wick rejection after breaking the top, it just immediately rejects. I'd be moving my stops to break even. I would not be leaving them open at that point, just to ensure you don't take an unnecessary loss. Now, we did break down quite impulsively here, but after we broke this low, we got a rejection, and we appear to be moving back up. So it is possible we are forming perhaps more of a larger flag or corrective pattern. Clear yet if that is the case, but that is a possibility. It is also possible that we move out more like this and then drop, but that's not a flag I would take because it's right on top of here. And that still, if you think about it, this still could be, it could correct out here, move down, and then move up. So it could be just fulfilling that pattern. So we don't want to get caught up in these corrective areas. Had you taken this trade here, that would have been fine, but there's nothing to take right now. You could even have taken this, although that would have been a more risky entry. You might have seen that as a morning star formation. But again, that would have been still more risky. It'd be aggressive. It'd be a very aggressive trade. So for a move to the downside, we want to see that daily close bearish, and we want to see a nice impulse down and it to form a flag, a continuation flag. Now, if it does that, I would like this area, and one of the reasons why is because that is a head and shoulders pattern. It just has lots of confluence. A flag in that area would most likely be very high probability. So I'd be looking to that area. If we impulse up, you just look for those smaller flags as we continue up. A break above this area, if you look at this on the daily, we obviously have some areas here, but if we break above this area, it would indicate the momentum is continuing to the upside most likely. So that is what we want to see if we want to see that upward movement, but just keeping it open to the possibilities that this could be just a larger corrective pattern to continue up. And we are starting to see this just move correctively out instead of continuing its impulse down. So we'll keep an eye on that as it progresses over the day and over this week. But that's what you'll know to look for in euro dollar. So for British pound dollar, we are seeing green. We are seeing this remain impulsive to the upside, but we are seeing it get a little bit more wicky. And so it could be indicating that the momentum is possibly slowing. We do have a double top area here that would be significant for a reversal if we are going to reverse. If you look at this on the hourly, I think that British pound forms some nice channels sometimes. But if you look at this channel, what does it give you the impression of? So you have the impulse up, moves into correction, impulse up, very corrective movement down, and it moves off correctively, right? So just corrective movement all the way up. So when you see that, what are we expecting? Well, we're expecting that the most probable situation is a sell, okay? Now, it doesn't have to. We know it doesn't have to. We could, this could be corrective, it could move out, and it could do that. Totally possible. But overall, this is very corrective. So the most likely scenario is a sell. What we want to look at is the high probability areas to sell. So you might have been looking at this and sold it here, and you could have, and that can work out. But you got to know that within a pattern, in the middle of nowhere, the probability drops. So that's a trade you're not going to want to take all the time. If we move up and we reject off from the trend line, so we get that third touch on the trend line, then I would be seeing that as a pretty good entry right there. And if you look to the past, let's see in the past. Yeah. So in the past, let's put on right there. So if we do that, yeah, it correlates pretty well to me. So if we do this, correctly move down, and then we reject like that, it'd be 1, 2, third touch. I don't count this. You could say third or fourth touch, and we get that rejection. I think that would be a nice sell. So that's potential, but it could continue to move a lot. But what you want is a good rejection in that area if you're going to take that type of an entry. But anyways, it is a corrective movement up. That is very corrective. To not see that sell, yeah. I mean, it's possible. It's possible this continues up. But on the hourly, to take an entry on it, we would want to see impulse and then a nice correction out of an impulse. So to kind of break through that pattern. But keep in mind, if we form that style, that's a reversal pattern. That's not a flag. And it's at the top. So keep that in mind. Sometimes people confuse reversal signals with flags just because they kind of look similar. But a reversal signal will have that either a high test or a rejection in one of its points. So that's British pound dollar. We're just kind of looking at this to see how it progresses over the week, but I'm not going to take any trades unless we get that impulsive movement. All right, so Aussie yen, just want to look at this very quickly. So if we look at this impulse, correction, impulse, we're looking to see if this will continue. We are seeing a little bit of slowing momentum, but the Aussie and the yen pairs and also Kiwi pairs can be more corrective. You'll notice this. It was very correctively impulsive down. So it can happen. So you just have to keep that in mind. On the hourly, this is pretty much what I'm looking at on the hourly. So that was the impulse. That was a nice flag there. But this is the flag. And then you just see impulse, correction, impulse, correction, impulse. And then that's a correction. This is an impulse. And this appears to be a correction as well. So the most likely scenario from here is the move up. That is what I'm expecting to happen in most likely scenario. If we break out impulsively like this, then you can look to see if this will continue to the downside. But I would not see this as a reversal yet. It just looks like a flag to me. If you remember in the past, we were looking at this and to see how it would react. We did break out of it, and then we formed a head and shoulders pattern. I don't know if you can see that, but we formed that head and shoulders, and we rejected. Head and shoulders work very well on euro pairs, so that's something to keep in mind, something to look at when you're looking at these pairs. But that was pretty much the pattern that you were looking at. And you could even draw in, let's see, yeah, it reacted fairly well to that channel. So ascending within ascending, 3 touches, and that rejection. So we did impulse down, formed a correction, impulse down, and then we're now moving correctively. So we want to be very careful on this pair. And if we're going to take an entry on it, I'd like to see it impulse down again and then form a correction before I would do that. But we also are very close. We want to put this on here. Do not only this as a double bottom, but that is almost smack dab right in the middle of the same area. So we got to see how it reacts here. It could get a reversal there. Just something to keep in mind. But again, on the daily, let's move this so you can see this more clearly. This is just looking at as a very corrective ascending channel. And overall, this whole pattern here is ascending corrective. So to see this break down further, we break it down to the hourly again here and break down below that. It's been wanting to do that. So this, we might be starting to see some moves on Euro Aussie soon, but there's nothing yet. And even if this does develop out, I'd be careful. You'd want a fully developed flag if you're going to take that now. All right, so this was a decent channel. I mean, you might not think so at first, but we did get that hover pattern, okay? And then it drops out into a larger flag. And instead of getting third touch, we got 1, 2, we got that double top, okay? Arcing nature double top, and it falls out. Now, I'm not too worried about this area here, but as we impulse down, what's happening? We're losing momentum and we're moving correctively, right? You notice that, don't you? So if you see that, it doesn't mean it's going to stop. Sometimes the momentum in the market will slow down, especially on a Monday or, you know, sometimes on a Friday afternoon. But you want to be careful of that. So on the hourly, that's what we're seeing. I'm not going to take anything here. I'd want to see this impulse and then form another flag out of an impulse, so I know that the momentum is there, because this could be a reversal. It's also going to be seen as a support area by a lot of traders, so that is why the momentum is dropping. So we got to see if we can break through that area and then form our flag. But this is one that is still somewhat impulsive, or was. It was somewhat impulsive to the downside. So we have to see how this is going to develop. It might be just forming a flag here, and then you could see if you want to take that as well if it fits your criteria. So Euro British Pound is another one. It's one of those pairs that when it's moving impulsively, you can get some really good bank on it. But when it's moving correctively, you have to be careful. So you'll notice very impulsive movement out of a corrective movement, okay? And also double top, arcing double top. Then what happens here? It slows down and it's moving very correctively. It's not making any progress. High test, low test, dojis. It's just losing. Well, I would put it this way. It's trying to figure out where it wants to go, right? So if we look at this, this is a descending channel coming out of an impulse, right? So do we want to trade in here? No, we don't want to trade in there. We don't trade in there. I know there's traders that specifically trade within those corrective areas, and that's fine if you have a style that works with that. But you're not going to make more than 5% a month. And most of the time, people are running right between 0.5 and 3% a month. The good traders that can do this. The bad traders lose a lot. So it's very a handicapped way to trade, is trade within these very corrective movements, because you just really are going to get caught on both ends, and you just don't want that. So the smart idea is to wait for those clear impulses. So if we drop down and we reject here, we might be able to get an entry on a third touch. Even if we can't get that entry, we'd be looking for a flag and then a move to the upside. We also know, however, that with Euro British Pound, it can create these running, descending corrective channels, and still drop out. So if we get those impulses, those nice impulses with flags, I'd be still willing to take it to the downside if it gives me that opportunity. If we look to the past here, we are very close, not very close, but we are close to, and it actually fairly well corresponds if we were to do something like this. And then you'd move this out like this. It could correspond very well, a double bottom and a third touch, and then we get that rejection. So that's a possibility. But descending, the most probable is a move to the upside. We just got to see how it plays out. All right, so Euro Kiwi, a little bit more sloppy here, but that is Kiwi. That's how Kiwi moves. So you got to keep a couple things in mind. First of all, we were looking at this larger wedge pattern. We didn't quite make it to the top of that pattern, and I moved this trend line to the last two touches, so this wasn't here as well. So you wouldn't have gotten a trade off from this because it wasn't really, in my opinion, clear. I mean, you could probably do something like, let's see. Yeah, I mean, you could finagle it. You could finagle it to make it work. And I'm not saying, you know what, that's fine. But I prefer not to force my opinion on the market. So, in my opinion, that's not a trade I would have been able to capitalize on, but that's fine. I don't care. It's not a big deal. What's important to me now is that we're moving to the downside. And we are moving correctively, but again, that is how the Kiwi pairs move. So we are looking to see if this will reject either on the trend line or double bottom areas as we move down. But we know Kiwi can just go like correctively like this. It just likes to do this, you know. And so understanding that, you know, if this was euro dollar, wouldn't be interested at all. But Euro Kiwi, you want to be careful. I don't want to trade here because that's extremely corrective. But here, without the wicks, I don't like those high Tesla wicks and low Tesla wicks, but ignoring those wicks, that I'd be interested in trading, okay? So just keep that in mind. If we do get an impulse and correction continue, just keep an eye on the trend line, see if we do get a rejection off from there, if we break it. If we do break it, how do we break it? But I'm not really anticipating any great move on Euro Kiwi, at least till probably Wednesday. But I don't know, it could shape up sooner, we'll see. All right, so I think dollar CAD is in an interesting position. So there's this larger, higher time frame trend line, okay? So this is very ascending in nature. And we are looking at this as a possible third touch. We're coming close to it, so that's something to keep in mind. But zooming in to the more recent area, I think you would probably agree with me that this is more descending in nature, and there's always that possibility that we get that rejection and then we get the move up. And again, it's going to correlate with dollar DXY. But we want to pay attention to a couple things. First of all, the movement right now is impulse to the downside. So we don't want to press, again, our bias on it and say, well, here's a trend line. I'm not interested in sells, and then it just keeps going. So, you know, if we get the opportunities, we want to take the opportunities, do we not? But we want to know the possibilities. So important thing to keep in mind, impulse, correction, impulse, correction, impulse, correction. Where are the impulses? To the downside. So since December 2018, the impulses on dollar CAD have been to the downside on the higher time frame, okay? Now, obviously, you could say this is an impulse here, but it's within a corrective pattern, so it doesn't matter. The actual impulsive movement, where the market wants to go, is to the downside. Doesn't mean it's going to go forever, obviously. We could get that rejection and move up. It's possible. But we have to keep in mind, where does the market want to move? It wants to move to the downside. So do we have that momentum to continue? We were looking at this area here to break. So this was the channel to break. And it did break. So we want to see how far that can make. Is it going to double bottom? Is it going to reject here? Is it going to reject here? Or will it create continuation and move down? But it's looking decent on the daily. So if you look at here, a little bit of a sloppy flags on top of each other. This is a flat flag and then a more developed flag. And now we're just kind of dropping down, more steps there and down as we get closer to this area. So I want to see how it develops, how it gets there, what we're looking at. You can do something like this if you want. I might adjust these a little bit. Let's see. I wouldn't do that yet because that's going to get invalidated. So we do something like, yeah, I like that. So you could do that or this. All right. And then you just got to see, you know, how does it react as it moves down. These type of channels, when we're doing these on the way down, they're kind of more inflection just to see how it reacts. It's not a set in stone. It's not like I would take a, well, that's reacting option too, so it'd be different. But I wouldn't necessarily take a rejection off from that necessarily. I'd want more confluence. But just have to see how this continues. But the movement is the downside, and we're just going to wait and see how, you know, if it forms a flag that we can get in on as a sell, or if it just starts to trickle more correctively, form a triangle, and move to the upside. All right, so you remember in my last video, actually 2 videos ago, I had these 2 ray lines on Kiwi dollar, and I told you as long as we range within these areas, as long as we're within these areas, we don't want to take a trade. Now, if you listened to me and you followed my advice, you wouldn't have got caught in that movement and got caught in and out. So you want to really pay attention to these type of situations where, you know, I don't want to be trading within that because it's crap movement. And if someone else tells you, well, no, that's where I make my big dough, then that's fine. Let them do that. If that's true, maybe they do, maybe they don't. I don't care. But if you want to trade their method, then you trade their method. But like I said previously, that style of trading, it's handicapped and you will never see anything higher than 10%. It'd be extremely hard. And the average really, 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 really profitable trader, quote unquote, the one that can trade that method, is going to be 3%, maybe 5% on a good month. But it's just not what you want to be trading. Trust me in that. I know a lot of traders. I talk to a lot of traders. I know people who trade indicators and support and resistance and different methods. Trading within those corrective movements is just one of the lowest percentage gains ways to trade. It just really isn't a good way. So stop beating that horse. So we are looking at this double top area to see if we get a rejection at that area. Obviously, there is good, people would say, resistance in that area, something to look at. Right now, again, this is Kiwi. It's a Kiwi pair. So even though this is moving correctively, it is a Kiwi pair. So this is the impulsive phase. All right. So impulse, correction, that was a nice flag. Impulse, and then it's correctly moving, flag, impulse, and this appears to be, in my opinion, a larger flag. I'm not saying that it can't break down. If the DXY does, Kiwi dollar will, but it's looking to me like this is just going to move up and continue its way up. So dollar yen and dollar Swiss are very similar in the fact that we are going to be waiting here for the impulse. We are very corrective. I don't want to trade within this. Now, you might see this as impulse, correction, flag to move downside, and I would agree that is most likely what is happening. But I wouldn't take it myself because of this. Okay? So if this pattern here was here, then I would totally take this. All right? You got that evening star formation, the doji, and the rejection. I would totally take that. but not out of here, right? So there's a difference. Where do we come from? Obviously, the potential is for this to continue. It could happen, but we've begun to move very correctively, and I'm not interested in taking a trade now. So if we impulse down and we form another flag, I would totally take that. But on the same token, you do have to be careful because it could be just that pattern, and we might reject here and just move up. Because it is a descending channel, it is a descending corrective pattern, it could break to the upside. So you want to be careful with that, but if the flag forms correctly, you can take that if it fits your criteria. It's just something I would look at. I would look at the possibility of third touch rejection if we get the right type of pattern. Preferably, if we move down, so we move up, we move down, and then we get descending corrective like that, and a rejection, I would take it. But I'd want a good confluence to take a trade there. So Euro Yen, it's a similar situation where we're close to this double top area. We are moving, well, we're moving down, but it's corrective out of an impulse. But we haven't made much progression out of this corrective area, so that's important to keep in note as well. If we look at the hourly here, it's important to see where we've come from and how we've come up. So we are impulsing. We're giving these larger corrections, larger corrections. We're not making much progression, if you'll notice, that we're kind of on top of each other. So you want to be careful trying to trade these. But if we do get an impulse up in a tight flag, because we have been very corrective, that is possible. In dollar yen, when it goes with very small flags. You'll see like this, very small flag, and it goes. So because we have been very corrective, it is very possible to see this form a nice tight flag and go. So you want to be on your watch for that with dollar yen. You can also draw this trend line on. It's only got 2 touches, so it's not set in stone. It doesn't exactly mean anything. However, if we do get a rejection there, then you know why. So it's just something to keep an inflection point. If it does move off from that, that is something to look at as well. But the probable is for this move to the upside. We just don't know if it'll happen now, or maybe it'll just continue down here, double bottom in this area, and which, you know, you could move this to here, or even here, or there. So any of those areas are a possibility for this to reject off from. But again, we're looking for that impulse and then the flag to move up. I would be taking the flag. I would not be inclined to take an impulse. I mean, a rejection, because we've already got the third rejection. If you're going to take it, you'd take this one. The fourth, the fifth, you know, and then it's just what's going on. You don't want to just keep taking those all the way down. You're going to take losses if you do that. So just looking at Euro Pound once more, I am going to put this on because we do got that rejection. It does appear to be forming that flag. Arcane Nature, yeah, it makes sense to me. It doesn't mean that it is confirmed, but it does seem to want to do that. So just see how this develops. If we do get a move up from here, an impulse, a nice impulse, it's most likely we will get a tighter flag as well because we have been somewhat corrective. So that's something to keep in mind, something to look for with euro dollar. Alright guys, so I guess that will do it. That's pretty much what I'm looking at for the market ahead for this week. I am expecting the momentum to pick up sometime between Tuesday and Thursday. And I would expect us to see more of those impulsive moves and more opportunities to capitalize on that movement. It doesn't mean there won't be any trades today or tonight. It's possible. But if there aren't any, don't worry because the trades will come. The worst thing you can do is get anxious and agitated and just want to jump in a trade because you'll take things that are not opportunities. And then when the opportunities come, you will have handicapped yourself. You'll crippled yourself and you will not take the good trades. So be patient. Wait for the setups that you are accustomed to taking, that you know work out, and take those and be patient, because they will come. You know, the market is setting up for opportunities every day. There are setups building. The question is if we're reading the market and preparing for them, or if we're simply logging into the chart aggressively wanting to take a trade because we want money. And if you're that latter category, then you're really in a really dangerous situation where you're going to lose money. So you want to check those emotions. You want to check the motivation. Money is not a good motivation for trading. It really is not. It's going to steer you wrong. It's going to cause you a lot of headache. Now, obviously, we trade because it makes money. You know, it is a side effect, and it's a very important side effect. But if money is why you're trading, then you're going to cloud your judgment. So you want to make sure that those emotions are checked and that you're really paying attention to what the market is telling you. We all miss things. It happens. It's human nature. But are we growing every day? Are we getting better? Are we getting better and better and better? And we should be. You know, a trader that's been trading for 10 years should be better than a trader that's been trading 5 years. You know. So that's what I'm looking at. Feel free to comment below. Tell me what you see, if you see something I didn't, or if you have any thoughts on the video, any comments or questions. I'm going to try my best to get a Bitcoin video out for you guys here. Last week I had ISP issues, and I was just swamped and overwhelmed, and it just didn't happen. I was working on a Bitcoin video and then had an ISP issue that lasted 2 days, and I was on the phone with the ISP for 6 hours. So that was a nightmare, and I don't want to deal with that again. But that's what I'll try to do. If you're not signed up for the BitRage course in the community, click the link below in the description and sign up for that. It will make an important impact on your life. I really believe that, and I really believe it is one of the best trading education courses in the world. As always, thanks so much for watching, guys, and